Pablo, good to see you. How you doing? How you been? JP, good to see you as well, brother. How you doing? Good evening. Morning, Miles of CMF. Shelly, good to see you as well. How you doing? Morning. How you been? Johnny, good to see you as well. How you doing? Hi, Miles. When can we expect war and crypto to dump? When can we expect war? When can we expect the crypto markets to dump? I'll get into that straight after I say the disclaimer of tonight's live. Mike, good to see you as well. How you doing? How you been, brother? Evening, Miles of CMF. Pierce, good to see you as well. How you doing? How you been? Good evening, Miles of CMF. Free Feather, good to see you as well. How you doing? How you been? Hello to my CMF family. Have a great day. Joe's, good to see you as well. How you doing? How you been? Evening, Miles of family. Ian, good to see you as well. How you doing? How you been? Evening, Miles of CMF. Manny, good to see you as well. How you doing, Manny? How you been? Evening, Miles. Semper, good to see you as well. How you doing? How you been? Sup, G. Sup, CMF. Hope all is well, though. Ray, good to see you as well, brother. How you doing? How you been? Hi, Miles of CMF. Dennis, good to see you as well. How you doing? How you been? Okay. Let's do intro and disclaimer, and we'll go straight to the first question. And quite a bit of news to go through on tonight's live. A lot of things are happening around the world in terms of the war situations that are happening with Ukraine and Russia piping up again and then hyping up again. And then you have also China and Taiwan, the situation is hyping up again. And then we also have Iran and the US and Israel situation happening. There's quite a lot of war scenarios happening essentially to go from tonight's live, which we'll go through it a bit essentially on the beginning part of the live show. Because there's a lot of also positive things that are happening around the world for the crypto space, especially inside the United States. Also, some perspectives coming out of the EU regarding the crypto space. A lot of announcements of partnerships happening. Also, some things that are happening on the XRP ledger, which we're going to go through on tonight's live as well. Now, before we go through any of these news topics, welcome to the CMF Live if you're watching this for the first time ever. The CMF stands for Crypto Miles Family. My name is Miles, and I'm hosting the live that you're watching right now. This is episode 290 of the CMF Live. It's incredible that we've made it to episode 290. We're going to continue going higher and higher. Also, essentially on this live, I talk about the most recent news that's happening around the world in terms of cryptocurrencies, CBDCs, AI, politics, regulations, vital information for you to know about regarding the world completely transforming into a digital space. We also essentially do Q&As on this live as well, which means if you do have any questions, put it down in the comment section. More than happy to answer any questions you may have. The disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. So, welcome to the CMF Live if you're watching this for the first time ever, and if you're a regular, let's go CMF. By the way, thank you so much to everyone who has, essentially, if you're watching this on YouTube, thank you so much for dropping a like during this live right now and dropping a comment outside live. And if you're watching this on X, I'm getting notifications right now from X. Thank you so much to everyone who's liked this live from the CMS, who's retweeted this live from the CMF on X. Put a comment outside the live, hashtag the XRP Army, and like each other's comments. If you haven't done that, CMF members, just take 5 seconds to like and retweet if you watch this on X. And also, if you're watching on YouTube, drop a like as well. Now, before we go through the first news on tonight's live, which is regarding the market data that's came out of the EU, from South Korea, from the US, a lot of things are happening around the world to talk about on tonight's live. Now, let's go first inside the comment section, and then we go straight into the first news. But before that, we're also going to be answering one question that was asked right at the beginning before I said a disclaimer. So let's go inside the comment section first. Good evening, Miles of CMF. Bull XRP, good to see you. How you doing? How you been? Hi, Miles of CMF. Dennis, good to see you. How you doing? How you been? Hi, brother. Kamal, good to see you. How you doing? How you been? Cool. Hello. How you doing? Welcome to the CMF Live. Hi, Miles of CMF. George, good to see you. How you doing? How you been? Good evening, Miles of CMF. How are you? Callie, good to see you. How you doing? How you been? Let's go. Let's go, Dazzle. Good to see you, brother. Evening, Miles of CMF. Tor, good to see you. How you doing? How you been? So, the first question I was asked on this live was regarding Johnny. Johnny asked the question of, hi, Miles, when can we expect war and market to dump? Well, regarding market to dump, it's two perspectives. So for the past week, I've been saying that there are two perspectives in the market space. There are two outcomes in the market space. I said one outcome is a perspective that came out of Bloomberg, which suggests essentially that if the traditional markets essentially go through some sort of turbulence because of tariff situations or war situations, that, essentially economic turbulence that's going to be happening, then it should be a positive for the crypto space, was one outcome for the last week I've been saying. So going into essentially April 2nd, which is Liberation Day, which is also known as Tariff Day for the rest of the world, essentially the outcome, one of the outcomes was a Bloomberg outcome, which suggested that traditional market spaces are going to go through some massive turbulence, which means alternative market spaces like the crypto market space should be a hedge against that, should essentially be a positive for the crypto space going essentially April 2nd and beyond. The other outcome that's been going around inside the crypto space is that essentially Bitcoin follows the Nasdaq, which means if the market faces turbulence, the Nasdaq will essentially feel turbulence. Bitcoin follows the Nasdaq's footsteps, which means Bitcoin will go through turbulence and the rest of crypto space will follow Bitcoin's footsteps due to not having regulation. So there's always been two outcomes on the table going into Liberation Day, which is essentially April 2nd. But we also have the other situations of the war situations that are happening, which was a part of Johnny's question as well. So regarding market dump, that's what's essentially happening. There's two outcomes on the table, Johnny, that I've been essentially saying for the past week, repeating essentially what Bloomberg has said, and the other outcome where, Bitcoin follows the Nasdaq's footsteps. So it's two outcomes on the table. It's been two outcomes since last week, essentially, regarding April 2nd. But the topic regarding war, when can we expect war? Well, the situation with essentially Russia and Ukraine is starting back up again. China, regarding Taiwan, has essentially, sent its warships near Taiwan, which means, is China getting ready to start some sort of an attack on Taiwan? Possibility. We also have obviously the bigger one, which is Iran versus Israel, and the US is also brewing up right now. And the US has a very high, just to put in perspective of how close the Iran and US situation is, we have an update today from the Iran and US situation regarding their war. And that is that Iran, once again, has decided not to back down and throw insults towards Donald Trump today. Also, Donald Trump, over the US military, in other words, has about roughly 29 B-4 very advanced jet pilot, essentially, aircrafts that carry quite an advanced weaponry system. There's about 29 of them roughly in the whole world, and the US owns all 29 of them. They are the most advanced, essentially, jets. There are war jets that are out there. Why am I bringing this up, and why does it sound so random? Well, because there's only 29 of them, the whole world, and the US owns all of them. 9 of those most advanced tech there is, most advanced weaponry there is in terms of a jet, 9 of those are right now en route to Iran. 9 of those. 9 of the most powerful weaponry, military-grade aircrafts are on the way to Iran. That smells like war. 29 of those in the whole world. There's only 29 of them. 9 of them. By the way, one of those aircrafts can flatten a country. Just one of those B-2s can flatten it can flatten pretty much, depending on the size of the country, but it can flatten a city very easily. 9 of them are en route to Iran. So regarding the war situation on Iran, it's brewing up rapidly quick right now regarding Iran and the US. Trump is not backing down, neither is Iran. Iran today also came out on the news and said that if the US attacks Iran, this is what Iran said from Iran's news perspective. Iran's government said if the US attacks Iran, then Iran will accelerate towards nuclear power. If the US doesn't attack Iran, then Iran won't accelerate towards nuclear power in any sort of a way. That is an absolute load of BS coming out of the Iranian government. If Iran could accelerate towards nuclear power, they would do it. But the reason why they won't do it, because they don't know how to make nuclear power. They've tried for the longest time. They don't know how to make nuclear power. The only reason that Iran's government said this is because they were trying to say that the US is pushing us towards nuclear power, which is an absolute load of BS. Iran has always tried to go towards nuclear power. No mind the US pushing or anybody pushing towards that direction. It's always been heading towards that direction. But Iran likes to play the victim card right now and say the US is bullying us. The US is forcing us to go nuclear power, which is an absolute load of BS. Iran has tried for the longest time to go towards nuclear power. It's just they failed many attempts they've tried to go, and they failed every single one of them because they can't get to nuclear power for some reason. reason. I don't know what it is, but they can't get to nuclear power in any sort of a way. But regarding the war scenarios, Ukraine and Russia, it seems like it's hyping up again. China, while essentially the US is busy with Iran's situation, China has decided to send its warships near Taiwan. So, essentially, while the US is focused on Iran with the help of Israel, is essentially China getting ready to, come towards Taiwan without the US essentially realizing it, because their focus is shifted somewhere else. That's also brewing as well. There's a lot of war scenarios brewing up right now. Too many are brewing up. But that's what's happening regarding the war. When can we expect the war? It seems like very soon by the looks of it. The Iran and US situation very soon. As I said, 29 B2, essentially, or B4, essentially, very advanced military grade jets are on the way to Iran. There's only 29 of them in the whole world, and the most advanced jets ever. 9 of them are en route to Iran. One of those aircrafts can flatten a country. So this is not a joke anymore regarding the US sending their biggest aircrafts towards Iran. The most advanced military aircrafts in the whole world. Many countries have tried to buy this from essentially the US. Russia has tried to buy this from the US. China, through multiple sources, have tried to buy this from them. The US is not selling this aircraft to no one. They are the only one that produces this most advanced piece of tech there is for the military. 29 of them are produced. 9 of them are en route to Iran. That smells like war. Evening. So regarding war situations, it's wrapping up quite quickly, actually, by the looks of it. Hi, Miles, CMF. George, good to see you. How you doing? How you been? Can you go through the One Love? Thank you so much for the £10.44 essentially donation. Absolutely amazing. Thank you so much, One Love, for the donation. It's going straight towards CMF hedge fund. Absolutely amazing. Thank you so much. Can you go through the list of what's going to be talked about today? Yes, I can. So on tonight's live, we're going to be talking about essentially I'm going to talk about America. We're going to talk about the Europe data regarding, essentially Europe's perspective on the market space moving forward. They're going to go through Trump's speech regarding Liberation Day, which is tariffs today. We're also going to talk about South Korea's new perspective on the market space. We're going to talk about Europe's essentially new perspective on crypto market space and regarding the US become the capital of cryptocurrencies. We're going to talk about some essential legislations to go from tonight's live regarding the advancements of crypto technology in the United States. We're going to talk about also some partnership news. We're going to talk about Japan news on tonight's live regarding the second largest bank in Japan getting involved inside the crypto space. A lot of news to actually go from tonight's live, and it's all international news related to cryptocurrencies, related to the market space and the war scenarios as well, which is also related to the crypto market space as well, because war creates turbulence. So that's the topics essentially we're going to be discussing tonight's live. A lot of international news to go through. What outcome do you think is possible? Johnny, what outcome do I think is possible regarding all the war scenarios? Do I think Ukraine and Russia situation is going to go away? Let's just say yes. I think that situation is going to go away, even though it is ramping up. I don't think in any sort of way, unless Russia and China are seeing, essentially the US's focus being shifted to Iran. Russia and China might take this situation, might essentially take this as an advantage to go towards the countries they wanted to. So Russia could, essentially go towards Ukraine and take more land while the US is focused on Iran. China might go towards Taiwan and try to take some of their land while the US again is focused on Iran. I think that's exactly what's happening, because all of US's focus regarding war has been shifted towards Iran right now, completely shifted towards Iran. So I think that is one of the outcomes that are happening essentially regarding the war scenarios. Regarding the crypto market space, everything is still moving very smoothly for the crypto market space, even though there are, as I said, war scenarios happening. There are tariff situations happening on April 2nd, Liberation Day. But behind the sidelines, as we talked about yesterday's live, and we're going to talk about on tonight's live, there's a lot of things happening in terms of legislations. There's a lot of things happening towards partnerships, announcements that are going to be happening internationally wise regarding the crypto market space, all the institutions that are entering the market space, the banks that are entering the market space. A lot of positive things are actually happening behind the scenes for the crypto space. But obviously, on the surface of it is all the war news and the essentially tariff situation that's happening. Behind the surface is the legislations, the regulations, the crypto adoptions, the institutions coming in, the banks coming in, the advancements that are happening on that sector. That's true. Let's go, Razzle. Hi, Miles. One Love says hi, Miles, and everyone. Hope everyone's got to go up early for work. I will listen to the live on my lunch break tomorrow as normally. Do God bless everyone. Let's go, One Love. One Love, thank you just for tuning in to send a £10 donation and then to, essentially listen to the live later. Thank you so much for, honestly, thank you, One Love. Good evening, Miles and CMF. Orphan, good to see you as well. How you doing? How you been? Good evening. Hi, Miles. Can't wait for another great live. And hello to all my CMF. Adi, good to see you as well. How you doing? How you been? So, first topic on tonight's live is regarding Europe's data and Trump's speech. So here it is. Markets gain on Europe data. And all eyes are also on essentially Trump's speech. While European markets are experiencing technical essentially rises, attention turns to Washington, supported by encouraging economic indicators that the essentially main indices of the old continent closed in the green this Tuesday. So one of the reasons why the crypto market space is relatively staying slightly positive, you could say, even though a war scenario is happening, Liberation Day is just around the corner, Tariff Day is just around the corner, is because one of the reasons is Europe's market space suddenly did quite well, which impacted the crypto market space. Also, there's the second outcome that's playing around, where is essentially we're coming up to Liberation Day. Traditional market space is going to fail. Everybody's going to run towards alternative market spaces being cryptocurrency. So there's also that hype of Liberation Day actually being a positive for the crypto space. Now, however, this improvement remains quite fragile still regarding the European market spaces, even though they closed in the green. There is also that situation of Trump's speech, which we're going to talk about now. Investors are holding their breath ahead of potential essential announcements from Donald Trump, who could essentially reinitiate the US trade offensive. The prospects of new tariff barriers rekindles tensions and threatens the reshuffle of the cards of global economic balances. The European stock exchanges ended significantly up this Tuesday, essentially driven by economic data deemed encouraging in the Eurozone. The CAC essentially 40 climbed by 1.15% to 7,880.1 points. The German DAX also gained 1.67%. The British FTSE rose by 0.61%. This increase is primarily explained by the declaration of inflation in the Eurozone in March, which fuels essentially hopes for more accommodative monetary policies coming from the European Central Bank. Inflation is slowing down, paving the way for a more flexible European Central Bank, while the Euro Stocks 50 index also recorded a gain of 1.49%. This context has rekindled appetite for risky assets, which has essentially influenced bond markets as well. Among the key elements that supported the markets this Tuesday, they are essentially the decline in bond yields, particularly the United States, where 10-year rate fell to 4.16%, reflecting increased demand for safe haven assets, a technical support related to price relaxations in Europe. In contrast, and America's essentially trend, the strongest performance of several stocks in Europe, Solutions 30 jumped by 10.7% after confirming its targets for 2026. Chandler's Electrics gained 2.4%, following a ratio essentially upgrade from HSBC Bank, while L'Oreal essentially was added to Goldman Sachs's conviction list, progressing by 3% up. Watchful moments is also in the currencies markets as the euro slightly fell to €1.08 in terms of dollars, in context of cautions ahead of the US announcements coming up on Liberation Day, April 2nd. The day essentially raises is therefore not a reflection of genuine enthusiasm, but rather a tactical position in the face of European central banks likely to essentially ease its policies as the US economy shows signs of critical slowing. The relative essentially optimism observed in the markets hides in a deeper concern related to America's trade policy. President Trump is set to speak essentially this Wednesday. He's expected to impose a 20% increase in tariffs on nearly all American imports coming into the country. This measure would mark a significant escalation in his nationalist economic agenda. Trump is implementing his program strongly without worrying about the disruptions in the financial market spaces. It summarizes Alexandra Harris, a strategist at bank, essentially a perspective that came out from a bank essentially based in France. So we're going to talk about this man's perspective, a French bank perspective coming out regarding Trump's speech on Liberation Day regarding tariff situations of 20% increases worldwide. He adds that his back and forth reduce and confidence of economic players and forcing central bank to adjust their strategies. The American economic situation exaggerates these tensions. The ISM manufacturing index published today fell into a contraction territory, illustrating essentially of the industrial activities. At the same time, companies are reporting a surge in import of prices, which have reached peak since June, essentially 2022, a situation that could be amplified by a more aggressive tariff policy. Trump, facing a slim majority, essentially in the House of Representatives, seeks to massively cut spending and to demonstrate the positive effects of his policies for American households, even at the risk of creating a significant short-term deterioration, according to essentially Alexandri. This stated essentially positioning could place the Fed in a delicate situation and affect global economic stability in the long run. If announced measures are essentially realized, the repercussions could be multiple in terms of the worldwide situation, in terms of trade policies. In terms of trade, they risk essentially provoking retaliation, exhibiting the tensions with China or European Union and fueling imported inflation. On the market level, they could also further erode confidence and push investors towards essentially safe haven assets like gold, sovereign bonds, or crypto. That is why essentially the crypto market is doing quite well for itself, because even a perspective coming out from a French company or a French strategist or French bank, their perspective is that what Trump is trying to do with the whole tariff situation and Liberation Day coming around the corner, essentially April 2nd, that this might push investors towards essentially might push investors towards safe havens, which in their eyes, crypto could be seen as a safe haven as well, like gold, sovereign bonds, or crypto. And that is why the crypto market is showing some enthusiasm, because we're getting close to essentially April 2nd, and that the crypto markets could be seen as a better place to be in when tariffs start to roll out the shelves on April 2nd, essentially. Now, US also essentially March ISM manufacturing PMI falls to 49. So the ISM essentially manufacturing PMI for March registered at 49, signaling a contraction in the sector. The figure declined from February's 50.3, marking a significant shift in manufacturing momentum. So the US data essentially comes out regarding the ISMI, regarding essentially manufacturing and labor markets in the US. They came out and they weren't brilliant, which also made a positive step for the crypto space, because again, traditional market space is failing, makes the other market space look like a good place to be in. So the ISM report essentially highlights a key supply management trends. Timothy, the chair of the ISM Manufacturing Business Survey Committee, commented on the results that came out today from the US, emphasizing the contraction in both of these new orders and production indices. The manufacturing PMI registered 49% in March, 1.3% points lower compared to the 50.3% recorded in February. The overall economy continued in expansion for the 59th month after 1 month of contraction in April 2020. Timothy essentially said a drop below 50 indicates a contraction in manufacturing potentially affecting the broader economy. The unexpected decline contrasts with the previous 2 months of expansions in January and February. This unexpected downturn could impact forecasts for the US economy, with analysts revising their predictions based on the upcoming data that just came out. Market reaction was swift, with potential pressure on the US dollars. Timothy further noted that the implications of prolonged contractions, emphasizing the importance of the PMI data that just came out as a leading economic indicator. Financial analysts are also closely monitoring the situation for any policy adjustments or economic interventions that may essentially follow this report. Following a 26-month contraction, the PMI expansion for January and February 2025 marked a recovery before the March contraction. Historical patterns suggest that shifts in market confidence tied to the PMI trends. And since April 2020, the economy had shown continuous expansions until recently. The dip in March could indicate a pivotal moment for manufacturing. Historical patterns highlight that PMI fluctuations often precede shifts in economic trends and growths and rates, with many essentially viewing it as a key economic signal. Current market analysis suggests potential regulatory and physical essential responses. Experts predict that cautions and optimisms if upcoming data essentially reverses this trend. In-depth essentially analysis indicates that the potential for restrict adjustments in the US monetary policies, considering the PMI's insights into manufacturing and broader economic health. So PMI data comes out and it's not looking good, but also it's not looking drastically bad, to be fairly honest, but it wasn't looking good. And because it wasn't looking good, it's also positive for the crypto space. Again, alternative market spaces are seeing where you want to be as an investor. So the same way essentially Europe's data came out and essentially the market was doing quite well for itself. But then we have the tariff liberation day coming up April 2nd, which is essentially tomorrow. The crypto market space is essentially being seen as a better place to be in rather than traditional market spaces going into April 2nd, Liberation Day, where every country is going to get tariffed by the United States. It turns out even the United Kingdom, who was waving the white flag towards essentially Trump's administration. And even though Keir Starmer went to the US and had a conversation with Trump and even invited Trump back to the United Kingdom, it seems like the UK is also going to be hit by tariffs no matter what. It's because Keir Starmer decided essentially continuing the Ukraine and Russian war. When Keir Starmer went to the US, he pleaded the white flag and joined Trump. When Keir Starmer came back to the UK, he decided to give more money to Ukraine, which infuriated Trump in a way, which I don't know why he decided to do that in any sort of a way. It was the worst mistake to make. As I said beforehand, any country that decides to go up against the US or up against the Trump, they're morons. Genuinely, any politician that thinks they can outlast in terms of a tariff battle against Trump, they're morons. Because they don't understand, or they do understand, and they don't care if the markets crash. Because every country, politician, essentially president, prime minister, every prime minister or president or politician or congressman or senator is coming out and saying Trump is one, bullying countries, which he really isn't, or two, essentially they're saying Trump is trying to crash the market space. And that is not the reality of it. Because if every country essentially decides to tariff the US back, and essentially it will be a losing battle for that country, which will crash their own markets. And this is why I say they're morons. It's either they're morons or they don't care about crashing the economy. And when the economy crashes, they're going to blame Trump. But in reality, they shouldn't be. They should be blaming themselves, because it's a losing battle going up against the US. It's the biggest market space in the world. Not only that, if the US market crashes, which is a very slim chance, because if they crash, we're all done for. As the International Monetary Fund put it, or the Bank of International Settlements, if the American markets sneeze, the world market catches a cold. In terms of a tariff battle, the US can go for decades compared to other countries. But if they crash, we all crash. So where's the benefit? And this is why I say every country, it's either the prime ministers and politicians around the world are morons, or they don't care about crashing their own economy and then later on just blaming on Trump. When in reality, it was the morons themselves that crashed the economy. It wasn't Trump's fault. And the topic about bullying when it comes to tariff is an absolute load of BS, because every country has been tariffing the US for the longest time. The tables are just reversed now, and it seems like it's bullying on the news. And the reality of it is, it's not bullying. It's just a level. It's just basically a playing level field right now. And this is why I stood by Trump regarding tariffs. It's something that needs to happen. The US needs to get control back of the world. And if tariffs is the way to do it, then it's the best way to do it. Tariffs have a lot of positive situations. Regarding the negative of tariffs is temporarily the market is going to be unstable, but long-term wise, we're good to go. And also on essentially all the positive things that are happening around the world to talk about, South Korea. Another thing that was added to the crypto space as a positive for today as well. South Korea's digital asset surge is what's also happening. So while Europe had a positive market space, and while the crypto space is slightly positive going towards April 2nd, because crypto can be seen as a safe haven compared to traditional assets, South Korea was also showing incredible amounts of numbers regarding the crypto space. So here it is. South Korea's digital asset surge captivates the public. Recent statistics that essentially came out of South Korea reveals a remarkable increase in digital asset participation in South Korea, as nearly 1/3 of its 52 million citizens are now engaging in cryptocurrency investments, according to new data that came out today. A staggering 16.29 million accounts have been established across various platforms, showcasing essentially a significant shift in public interest towards digital assets in South Korea. Data shared by essentially South Korean government and reported by Yonhap indicates that platforms like Upbit, Upthumb, CoinOne, Corebit, and GoPax are witnessing a significant influx of new accounts, and this trend illustrates a growing enthusiasm for digital assets in terms of the sector among the populace. As of March 2024, the number of investors stood at 14 million, with more than 500,000 new participants entering the markets since then and towards the crypto market space, influenced by a lead up to the US election as industry specialists projects that this number essentially may exceed 20 million in the near future. Recent developments reveal that South Korean banks are increasingly partnering with digital asset firms. It's not just that the data has came out and it showed that the people of South Korea are very tremendously moving towards crypto assets, but also the banks in South Korea are also moving towards blockchain companies. The Financial Services Commission is preparing to launch a pilot program in late 2025, which will permit 3,500 companies in South Korea to enter the digital asset market space, making a notable shift since the 2017 ban on corporate transactions. In 2017, South Korea had a law where essentially crypto companies and normal companies in South Korea weren't allowed to work together. This year, South Korea is going to open the floodgates of their essentially companies, South Korean companies working with blockchain companies, and about 3,500 South Korean companies, 500 South Korean companies are going to come into the crypto space this year, coming out of South Korea. A country that banned companies essentially in blockchain working together is now opening the floodgates. And 3,500 South Korean companies are about to be added to the blockchain space. And they're all very eager to enter the blockchain space. And this is essentially what I meant regarding, essentially the next clientele into the crypto space or institutional clientele. It's not just essentially South Korea's institutional clientele I'm talking about, essentially. Hong Kong's institutional clientele as well. The US, in terms of institutions entering the market space, is tremendous, or institutions helping blockchain companies go public. Yesterday on this live, we talked about Circle and JP Morgan and Citibank coming together to essentially help Circle go public, USDC. We also have essentially a lot of institutions in Europe that's coming into the crypto space. We're going to talk about Russia on tonight's live as well. A lot of news is happening out of Russia as well. But in terms of the next clientele being institutional clientele, day by day, it's showing that is definitely true. And it's also a perspective that came out from Grayscale's analyst, JP Morgan, essentially JP Morgan's analyst, Nicholas, Standard Chartered Bank's analyst said the exact same thing. The next clientele entering the crypto space are institutional clientele. And this is just another confirmation of 3,500 institutions, 3,500 institutions from South Korea this year are entering the crypto space. And this was a country that banned institutions and crypto working together. Potential, essentially, an official source emphasized that the market's potential, suggesting that while it may appear saturated, there remain numerous opportunities for innovation and growth. Digital asset investments are rapidly gaining traction among South Koreans. Collaborations between banks and digital essentially firms are increasing. Regulatory changes are paving the way for corporate engagements, and expectations essentially for investor numbers continue to rise significantly. The information presented essentially illustrates the swift expansion of digital asset landscapes in South Korea, capturing both individuals and corporate interests as financial institutions adapt essentially and regulate and facilitate a corporate participation. Optimism regarding the sector's viability and growth prospects continues to essentially flourish. Growing enthusiasm for digital assets combined with progressive corporate initiatives underscores the vibrant and evolving nature of the market, fostering an encouraging environment for potential investors coming out of South Korea. And by the way, the number one token purchased by South Koreans themselves is XRP. It genuinely is. And there has been times in the market space of South Korea where XRP sales were more than Bitcoin and Ethereum purchases combined. The number one token essentially that South Koreans go towards is XRP. The data is there to prove it. And there has been times where more XRP was purchased than Bitcoin and Ethereum combined on the market space. Now, revolutionary MasterCard is what we talk about. MasterCard has decided essentially to introduce to the world their new platform, you could say, that's coming out soon. You see, in the world of digital currencies, or essentially what we're heading towards, just an entire blockchain and AI world, companies like MasterCard or Visa would have become obsolete because there was no need for them. I could pretty much just use the XRP ledger to send money to a friend, a relative, or a business, or anyone around the world. And there was no need for essentially MasterCard or Visa. They would have become obsolete. And that's what essentially blockchain was trying to achieve, to cut out all these middlemen. However, MasterCard did decide to jump on essentially on the blockchain bandwagon a while ago. They even started a blockchain essentially department where they started funding startup companies and bring them into MasterCard and see what ideas they have that they can add to MasterCard. So MasterCard came up with essentially a world token type of scenario where they've created a multi-token network. And they were working on this for about 2 years, you could say, roughly. But now they're getting ready to release it towards the market space. And this is what MasterCard has said. The financial landscape is witnessing a systematic shift. And at the forefront of this transformation is none other than global payments giant MasterCard. In a move that's sending ripples through both the traditional finance and the cryptocurrency sector, MasterCard is building a groundbreaking multi-token network. This ambitious project aims to create a seamless pathway for digital asset transfers, connecting consumers, merchants, and financial institutions like never before. Raj, MasterCard's Executive Vice President of Blockchain and Digital Assets, recently unveiled the company's vision to Business Insider. Imagine a world where transferring digital assets is as straightforward as user-friendly as using popular mobile apps like Venmo or Zila. This is precisely what MasterCard is striving to achieve with its MasterCard blockchain network. The goal is clear: to bridge the gap between the established world of TradFi traditional finance and the rapidly evolving realm of decentralized crypto markets. By essentially leveraging its global scale and expertise, MasterCard is poised to become a pivotal player in this market space. But why is MasterCard, a company essentially with credit cards, venturing into blockchain technology? The answer lies in the growing recognition of blockchain transformative potential. Financial institutions are increasingly acknowledging that blockchain isn't just about cryptocurrencies. It's a foundational technology that's capable of essentially spawning innovative business models and enhancing executive financial infrastructure. And at the heart of MasterCard's initiative is the multi-token network. This is the breakdown, some bullet points regarding what MasterCard is built and is about to be releasing. Interoperability. The network is designed to facilitate the smooth transfer of various digital assets. This means it's not limited to a single currency, but can potentially support a wide range of tokens, including stablecoins, central bank digital currencies, and other forms of digital values. You could pretty much say that MasterCard is about to be releasing their own wallet, just like essentially MoonPay or Trust Wallet or MetaMask or Xamon Wallet. We could also maybe have essentially very soon a MasterCard wallet that also accepts cryptocurrencies, stablecoins, and CBDCs. Compliance-focused MasterCard emphasizes that the network is being built with regulatory compliance in mind. This is crucial essentially for fostering trust and adoption among financial institutions and ensuring that the network operates within legal frameworks. User-friendly experience, drawing inspiration from user-centric platforms like Venmo and Zila, MasterCard aims to create an initiative and accessible experience for all types of users of all technical backgrounds. This focus on ease of use is vital mainstream adoption for MasterCard's new venture. Bridging TradFi and crypto. The core objective is to create a bridge between traditional financial systems and the decentralized world of crypto. This essentially involves enabling TradFi institutions to engage with digital assets in a secure and compliant and efficient manner. MasterCard's move isn't happening in a vacuum. There's essentially a palpable surge of interest and from financial institutions and blockchain technology. And these institutions are no longer on the sidelines. They're actively exploring how blockchain can revolutionize their operations and create new revenue streams. Again, the only reason that MasterCard is heavily involved in blockchain and is about to be releasing their new platform that accepts multiple types of tokens is mainly essentially because of institutions. The next clientele coming inside the crypto space is institutions, and MasterCard just made that very clear once again, like any other company that's coming up and saying the exact same words. Next clientele towards the market space, the crypto market space, is institutional clientele. Efficiency and speed. Blockchain technology promises to streamline process and accelerate transaction speeds, particularly in areas like cross-border payments and settlements. Transparency and security. The inherent transparency and security features of blockchain can enhance trust and reduce risk associated with financial transactions. New business models. Blockchain opens doors to entirely new business models, such as tokenized assets, decentralized finance applications, and innovative payment solutions. In captive, essentially competitive advantages. Early essentially adoption of blockchain technology can provide financial institutions with a competitive edge compared to essentially their own competitors. Now, MasterCard's multi-token network represents a significant step towards mainstream adoption of digital assets. By creating a compliant, user-friendly, and interoperable platform, MasterCard is lowering its barriers for both consumers and institutions to engage with worldwide crypto use. The development of such network is crucial for unlocking the full potential of digital assets and transfers and integrating them seamlessly into the global financial ecosystems. As the networks evolve and matures, we can see and expect to see a wider range of use cases emerge, from enabling faster and cheaper cross-border payments to facilitating the tokenization of real-world assets, and possibilities are vast on MasterCard's new platform that's coming out. MasterCard's initiative could also be very well a catalyst for an exclusive and efficient financial future ahead of itself. MasterCard's foray into blockchain with its multi-token network is more than just a technological upgrade. It's a strategic move that signals a profound shift in the financial industry by actively essentially building a bridge between TradFi and crypto. MasterCard is not just adopting to the changing landscapes, it's actively shaping this changing landscape for the financial institutions. This revolutionary project holds the promise of making digital assets more accessible, more usable, and integrated into our daily lives, paving the way for a truly interconnected and efficient global financial system. So, MasterCard is about to be introducing to the entire world their new platform, their multi-token blockchain platform, which I'm guessing from what they're saying, essentially their platform is going to be a wallet. So very soon people will be able to download a MasterCard wallet, the same way essentially you've downloaded essentially MoonPay, or you downloaded Trust Wallet, or you've downloaded essentially MetaMask. You can pretty much get a MasterCard wallet, and it accepts multiple tokens. You can do transfers on it, and it even accepts CBDCs according to MasterCard. They haven't left any token out whatsoever. And they are also focusing on tokenization. They're going to be releasing to the platform as well. And it does seem like they don't want to get left behind. But the main point MasterCard made is that the next clientele entering the balls of the market space is institutional clientele. That's the next clientele is entering the market space. And again, it was mentioned by MasterCard themselves. So again, while the world essentially is focused on the war situations or the tariff situations, Liberation Day, this is all the things that's happening behind the scenes. You have MasterCard's announcements of their new app, essentially their new platform coming out. Now, what we're going to talk about next is regarding Grayscale. But before we talk about Grayscale, let's go inside the comment section first. As I said previously, this is live, just like always. If you do have any questions, put it down in the comment section. More than happy to answer any questions you may have. So let's go inside the comment section first, and then we go straight into the next news on tonight's live, which is going to be about Grayscale. But before we talk about Grayscale, let's go inside the comment section first. So let's see where we are. And by the way, I read everybody's comments as usual, as I do Monday to Friday when I do this live. So let's see where we're at. We were at here. Evening, Miles CMF. Joe, good to see you as well. How you doing? How you been? Hi, Miles CMF. Stormy, good to see you as well. How you doing, Stormy? How you been? Is it true Trump fooled the market today with tariffs? Is it true that Trump fooled the market with tariffs? No. Trump said a while ago, essentially, that the Liberation Day is not going to be on the 1st of April, just in case anybody thinks, essentially he's going to be fooling the market space. He said Liberation Day is going to be April 2nd, just in case everybody thinks it's April Fool's. Evening, Miles. Lee, good to see you. So how you doing? How you been? Hello, Miles and CMF. Great to join live again after a while. Ginos, good to see you. So how you doing? How you been? Evening, Miles. Mac, good to see you as well, brother. How you doing? How you been? But come on, no, the Liberation Day is genuinely serious. Evening, Miles and CMF. We can see the light at the end of the tunnel. Let's go, CMF. Hold on to your bags. Let's go, Peg. Facts. Absolutely. Hi, Miles. Hope you're doing well. Yama, good to see you as well. How you doing? How you been? Which might happen first, Miles? $1 million for Bitcoin or $100 for XRP, just for fun? What do I think is going to happen, essentially? $1 million for Bitcoin or $100 for XRP? Well, if Bitcoin is sitting at $1 million, XRP is sitting way above $100, on the XRP at $100. What do you think about XCN? But it does depend on rules and regulations. What do you think about XCN? What do I think about XCN? Same opinion I had a long time ago on it. My opinion a long time ago on XCN was it's not a project that I would say is a must-have in my portfolio. It's not a scam project in any sort of way, but it's not a project that I would say I must research this and get this and add it to my portfolio. It's not a project for me to essentially go into in any sort of way to add it to my portfolio, to go out of my way to research and add it to my portfolio. The glance I had into XCN a while ago, it didn't impress me. In my opinion, there are better projects to be focused on, especially going into a space of rules and regulations right now. What chain do you think MasterCard will use? Well, according to MasterCard, it's going to be a multi-token, essentially blockchain. But MasterCard does have a few partners. They had a partnership essentially of using Ethereum's chain, which then they suddenly dropped and went towards Solana because Ethereum was too expensive on fees. But they could still be using Ethereum for tokenization purposes, who knows? But we do know for a fact that MasterCard is a partner of Solana. They are a partner of Ripple. They're a partner of Stellar. They have a few partners inside the blockchain space. AVAX as well. Let's see which one they're going to go on with essentially first, or they're just going to utilize all of them together. Hence probably why it's named the multi-token MasterCard blockchain, maybe. Let's see. My biggest holding is HBAR, XLM, and then XCN. Okay, Nasir. Well, HBAR, excellent. Regarding your portfolio, if you have HBAR on it, excellent. XLM, excellent. XCN, I hope it works out for you. I hope it does excellently. I hope it does amazingly well for you in your portfolio, honestly. But HBAR and XLM, incredible projects to have in your portfolio. And regarding XCN, I hope it works out, and you make a tremendous amount of money for yourself. Not financial advice. Now, Grayscale is what we'll talk about next. Grayscale files for an ETF status for digital large cap fund. A while ago, Grayscale essentially applied for a large cap ETF, which essentially combined Bitcoin, Ethereum, Solana, XRP, and a few other tokens into one big ETF. And they filed that in with the SEC. Now, the previous SEC, Gary Gensler, acknowledged it, but didn't really care about it. The new SEC, well, they have to acknowledge it and they have to accept it because they're pro, essentially, crypto. If they don't, then they get pressured by, essentially, Trump's administration to go and become pro crypto again. So, Grayscale has decided to file an update of what the hell happened to our, essentially, ETF. What's the status of our ETF? When are we getting the green light for our large cap ETF, which involves combined assets of Bitcoin, Ethereum, XRP, Solana, Cardano, and a few other ones? Grayscale has taken a significant step by filing with the US SEC today to transform its Grayscale essentially digital large cap fund into a publicly traded ETF once again. They're essentially applying for a status now, essentially what's happened to the update. The recently submitted filing aims to provide a broader investor access to cryptocurrencies. Grayscale's Investments, a subsidiary of Digital Currency Group, has submitted an S3 this time registration with the SEC. This move seeks to essentially convert its digital large cap fund based on the Cayman Islands into an ETF. The fund holds Bitcoin, Ethereum, XRP, Solana, and Cardano, offering a diversified crypto portfolio. The fund's potential change to ETF status could significantly increase its investor access to a large cap in cryptocurrencies, potentially essentially the access to digital assets. ETFs are often attract a wider range of investors due to their tradability and accessibility through traditional brokerage accounts. While reactions essentially from the industry leaders remain scarce, the prospects of a broader crypto ETF market has essentially steered interest among investors. With Grayscale's previous success in launching Bitcoin and Ethereum ETFs, expectations are high for similar market prospects with the new submissions. Grayscale's ETF transition may promote further investor diversification, potentially influencing financial accessibility to crypto markets. This transition is, if successful, might pave the way for more innovative investment vehicles in cryptocurrency sphere, posing a challenge and opportunities for regulatory adoption. Experts suggest also that if Grayscale's ETF is approved, it could lead to a substantial influx of institutional investments into cryptocurrency markets, further legitimizing digital assets. If Grayscale gets their green light, essentially, for their large cap fund ETF, which is basically Bitcoin, Ethereum, XRP, Solana, and Cardano, then there's no reason for the SEC to be wasting more time on the XRP ETFs that need to be approved, or Solana's ETFs that need to be approved, or Cardano's ETF that needs to be approved. Because if they accept the large cap fund, then what's the essentially delay on the other ETFs? So this gets approved. The rest should just be like a domino effect of approvals for the rest of the ETFs. Now, and it should get approved, to be fairly honest, because this new SEC is pro-crypto. They've been dropping, crypto cases left, right, and center, like domino effects. They're very pro-crypto. They're trying to create legislations. They also have 4 upcoming public roundtable meetings coming from the SEC, which are revealed the timelines and the dates of those essential roundtables as well. So there's no reason for them to waste any more time and approve it. Also, we know for a fact that Grayscale sues, because the reason why we got Bitcoin ETFs happening in January when they first essentially originated is because Grayscale sues and they win cases very quickly. Now, US lawmakers are about to be reintroducing crypto retirement bills for Trump. The state essentially of Alabama has decided essentially to, well, Alabama Senator Tommy is making another attempt to pass a law that would let Americans invest in cryptocurrencies through their 401ks in terms of their retirement plans. His bill, called the Financial Freedom Act, was first introduced back in May 2022 and failed to essentially pass both 2022 and 2023. In March of 31st interview on Fox Business News, he said he planned to bring back the bill on April 1st through Congress. Has not essentially taken any official actions yet, but he affirmed that the bill as a part of his support for Donald Trump's role as the cryptocurrency president, saying that Americans should have more control over how they invest their money, especially their retirement funds. The Financial Freedom Act seeks to minimize regulations made by the Department of Labor, which essentially now restricts the types of investments that essentially 401ks can go towards. If this bill passes, citizens can invest in cryptocurrencies as a part of their retirement accounts without government interferences. And Wyoming Senator Cynthia Lummis supported the Financial Freedom Act back in 2023. But it is essentially unknown if she will support it again this time around. During a 2022 interview, for example, she expressed strong support for enabling individuals to use Bitcoin in their retirement, essentially, and saying she felt very comfortable with the idea. The crypto retirement bill comes as members of Republican-controlled Congress are working on new laws to establish rules for cryptocurrency markets and stablecoins. Supporters of the bill hope to get these laws passed and sent to Donald Trump for approvals before August, essentially, recesses, and fearing that they could become more politically controversial if delayed. On April 1st, voters in Florida will choose their representatives for their essentially state's 1st and 6th congressional districts. Republican candidates Jimmy and Randy are receiving strong support from crypto industries thanks to their $1.5 essentially $1 million in media spendings from Defend America Jobs PAC. So, a new bill that could be possibly passed and essentially signed into by Donald Trump into law is that essentially American citizens should have the right to invest, no matter what state they're in, to invest in their 401ks, their retirement essentially fundings, towards cryptocurrency projects. Any crypto they want to go for. It could be ETFs or it could be cryptocurrencies that essentially American citizens should have the right to choose what their retirement funds should be going towards, which I agree with. Everybody should have the right, but obviously also the knowledge, because if you choose the wrong project, then there goes your retirement fund. So I agree 100%. People should have the right to, choose where to invest their money in, or their retirement funds or their pension funds or whatever. It is their money at the end of the day. But also, I think if they're going to open the doors for people to choose where to put their investment funds, where to put their essentially retirement funds and pension funds, they should also give people the knowledge about cryptocurrencies before they just let willingly people choose wherever they want to invest their money in, just in case it goes south. And some people lose their pension funds because they invest into the wrong project thinking it was going to go to the moon. You know how people are. When a lot of people enter the crypto space for the first time, they don't make the right decisions. Some people do make the right decisions inside the crypto space when they enter it for the first time, but some people don't make the right decisions, and this is retirement funds we're talking about, so nobody wants to lose that. Now, but it is amazing that this bill essentially is going to be passed some way or another and then signed by, essentially signing into law by Donald Trump. Now, what we're going to talk about next is the US's openness to crypto that could raise risk levels in TraderFi. So a perspective that's essentially came out of Europe, that's adding also a positive towards the crypto space, which is the two outcomes that I've been saying for the past week regarding April 2nd, Liberation Day, which is also known as Tariff Day. So when Trump announces the tariffs is going to be announcing today, essentially, because today is the 2nd of April. So Trump announcing the tariffs today, essentially 2nd of April, Liberation Day, in other words, Europe has came out with an interesting perspective. They've said essentially that if Trump is going to be doing this, then it's going to push people towards crypto assets. And if Trump is trying to make the United States the capital of cryptocurrencies, it's also going to push them towards more regarding crypto assets. And it's going back to the two outcomes that I've laid out. And my two outcomes were based on perspectives coming from analysts from JP Morgan, Standard Chartered Bank, Bloomberg, and so on, and Grayscale, which was essentially that April 2nd, either the market space is going to react in a positive way because traditional market spaces are going to, essentially not do too well for themselves because they will be the mostly impacted by tariff situations, and alternative market spaces will be a much more positive space to be in. Hence why the crypto market space could do well for itself. So perspective on Bloomberg, that was. The other essentially outcome was that Bitcoin follows the Nasdaq. If essentially Nasdaq, feels the pressure of turbulence from tariffs, then Bitcoin is going to follow the Nasdaq's footsteps as it normally does and tumble with the Nasdaq. So, however, Europe has came out with an interesting perspective. So here it is. The US's openness to crypto could raise the risk of levels in TraderFi. European regulators came out today and said, this crypto-friendly stance has the potential to accelerate crypto adoption. This is a perspective coming out from Europe. This crypto-friendly stance has the potential to accelerate crypto adoption, including institutional investors. The US's crypto-friendly stance could increase the level of risk in financial markets by deepening the connection between traditional finance and the digital asset economy. According to regulators, the European Securities and Markets Authorities, the US crypto-friendly stance has the potential to accelerate crypto adoption, including by institutional investors. Even Europe themselves have came out today and said, not only is Trump really trying to accelerate towards cryptocurrencies, but also this whole situation of tariffs could push people more towards cryptocurrencies. And not only that, just regarding the retail section being pushed towards the crypto space, he's saying that essentially the Europe regulators are saying that institutions are also being pushed towards cryptocurrencies because of Trump's policies. The European Union's financial markets regulator said in an interview essentially to the spokespersons that this would be essentially turning an increase in terms of interconnectedness and failing relative safeguards, risk of negative spillovers, effects between crypto and traditional market spaces. Europe is scared that crypto and traditional market spaces will connect too much together because of Trump's policies. But that's not really a bad thing. That's a great thing if you're inside the crypto space. Now, since becoming essentially president on January 20th, Donald Trump has ordered his administration, obviously, to set up a Bitcoin reserve and has urged it to establish a crypto-friendly policies and a crypto stockpile. And this crypto market had already reacted positively to Trump's election victory back in November, and Bitcoin climbed to a record high of around $109,000 back then on the day he was sworn in, essentially from CoinDesk's data shown. In a joint essential report published today by the European Commission, by the European regulators, the European Bank Authority, and the European Insurance and Occupational Pensions Authority identified volatile crypto asset valuations driven by the expectations of US policy agendas, increasing interconnections to traditional markets, the traditional financial markets, as a key driver in financial markets. Separately, Piero, the executive board member of the European Central Bank, urged for the digital euros and the European Central Bank backed digital version of the single currency to substitute for crypto assets, which he described as being heavily volatile and speculative in their nature. Furthermore, the United States push to maintain the essentially dollar's global dominance through the promotion of stablecoins worldwide presents its own set of challenges, said essentially Piero. So Europe came out with an interesting perspective today that even though a lot of people inside the crypto space and crypto influencers, crypto retail people, even some news channels would have told you Trump is ruining the crypto space, is what they were saying, which I said that's completely out of BS. Trump has actually fixed the crypto space and is still fixing the crypto space. Interesting enough, the perspective that came out of Europe today from European regulators and the European Central Bank and essentially other departments that are coming out in Europe as well, which is the European Banking Authority, the European Insurance and Occupational Pensions Authority, and so on. A lot of European departments today came out and said Trump is actually pushing the market space towards crypto assets, that Trump's policies are actually pushing not just the retail section, but institutions towards the crypto market space, and that Europe is afraid that the crypto market space is too volatile, and that Trump is, essentially pushing the market space non-stop towards the crypto market space and trying to connect blockchain to the traditional financial market space. That's not really a negative. That's a positive. If you ever wanted more confirmation that is Trump really doing his job well, is Trump really, helping the crypto space, essentially gradually moving the crypto space higher and higher up that ladder, connecting the financial market spaces together? Yes, he is, even according to European regulators, which is incredible to hear, even coming from their perspective. They're coming at an angry perspective, but it's really a positive perspective. Now, before we talk about the next news on tonight's live, which is regarding Coinbase, let's go inside the comment section first. Before we talk about the next news, we're going to talk about Coinbase next, but before we talk about that, let's go inside the comment section first. As I said previously, this is live, as it always is when I go live Monday to Friday. If you do have a question, put it inside the comment section. More than happy to answer the questions you may have. I read everybody's comments one by one. So let's see where we were at. We were at here, and then after that, we were straight into the Coinbase news. We were at here. Miles didn't even get a notification that you were live. Don't worry, Christopher. Good to see how you're doing. And Torax V3, good to see how you're doing. Hi, Miles. What real-world projects you think can be a major catalyst or even a narrative in itself? which crypto projects do I think are going to be essentially a major catalyst? XRP, without a doubt. XRP is going to shake up the traditional market space in terms of finance. XRP is going to completely revamp that market space. XLM will do something similar on those lines. XDC will definitely do something similar on those lines. HBAR will do something similar on those lines. AVAX will completely revolutionize the tokenization space as well, my point of view, especially their subnet green. And AVAX is doing quite a lot of decent partnerships towards some major financial players, to be fairly honest. But XRP, in terms of the XRP ledger, is also going to do very well in tokenization. One thing that XRP is going to achieve quite well in is also a blog post that Ripple put out themselves, essentially 6 months back, when Ripple was talking about how their focus is really towards small and medium-sized businesses. The reason why Ripple essentially shifted their focus, not just, obviously they have the larger institutions behind them as well, but the reason why Ripple decided to put a lot of focus on small and medium-sized businesses is because Swift failed in that category. You see, Swift was so expensive for small and medium-sized businesses that it just wasn't essentially viable for them to go international. So a lot of small and medium-sized businesses just stayed domestic because Swift was too expensive for them to go international. So with Ripple's technology, with the XRP ledger, essentially coming in, change the financial game forever. Not only are essentially large institutions going to benefit from it, but small and medium-sized businesses that were left out because of Swift's so expensive essentially platform, they can essentially, when joining the XRP ledger, they can advance and go international. So a lot of businesses are actually going to grow. Small and medium-sized businesses around the world are actually going to grow because of the XRP ledger, and because it's 24/7, because it's scalable, because it's cheap, because it's fast on transactions. So a lot of businesses, small and medium-sized businesses that never tried to go international because it was too expensive because of Swift, are actually going to grow massively. And regarding Swift, essentially moving regarding, $7.2, $7.4 trillion was the last data that came out regarding Swift, how much it moves a day, 7.2 trillion, 7.4 trillion. It was the data that came out 2022 from Citibank reports. Swift is only moving essentially Monday to Friday and large institutions, and some medium to large institutions are using Swift worldwide. But with XRP Ledger, it opens the door up to small and medium-sized businesses that couldn't go international, but now they can. So XRP, in my opinion, all the XRP ledger in general, is going to revamp and reshape the financial industry as we know it. Not just for large institutions, but also small and medium-sized businesses that were left out from Swift's expensive platform that never made sense for them to go international. So the majority of small-sized medium businesses just didn't even bother going international. And there's an article about that, also a blog post on Ripple's own website, regarding the data points they went to. So regarding essentially which projects do I think are going to be a major catalyst, essentially moving forward, the XRP ledger or XRP itself are going to revamp the financial industry for small and medium-sized businesses 100%. And they're going to move more money daily regarding what Swift was moving. Even though Swift is a messaging standard, but Swift on net value was moving $7.4, $7.2 trillion a day. So XRP ledger, major catalyst in the financial category, major catalyst. They've talked about what they're going to do and which businesses will advance the most regarding being on the XRP ledger. So XRP, without that, major catalyst. XLM, major catalyst as well. XDC, major catalyst. HBAR, major catalyst. AVAX, major catalyst. There's a lot of crypto projects that have humongous potential, essentially, in this blockchain space, and some projects that might not do too well. But those ones are going to do tremendously well. I lost my money all in Bitcoin. This is my last message. I regret investing in Bitcoin. It sucks, really. Sky, don't worry. You can essentially, if you do lose money inside the crypto space, everybody loses money. If you don't invest, you don't know. My father's always told me that essentially profit is on the other side of risk. So, even if you, essentially lose a lot of money in the market space, it's just, you got to go back to making the correct decisions. You got to realize where you went wrong and then go back to a drawing board and start back up. So if, essentially, Bitcoin was not the asset for you because you lost too much money on it, there are other assets out there that could potentially make you a lot of money. Not financial advice in any sort of way. Always read up on what you're buying. You have a better understanding of what you're buying. And also having a better understanding on your assets makes it better for you, because when the market goes through turbulence, you don't panic sell. Because if you know why you're, for example, holding XRP and the market starts getting through some turbulence and tariff situations and war situations and XRP is going downwards, you don't panic. Because if you understand what it's trying to achieve, then you don't care about it going down. But if somebody's holding an asset that they don't really know much of, then that's the type of people that panic sell. Because when the market goes through turbulence because of war or tariff situations or any other economic pressures, the assets that I'm holding myself personally, I know what they're going to achieve. I know their contracts for and I know their partnerships, and I know their licenses, and I know how far their reach is going to be. Or if they sign some new partnerships, I'm always updating myself. So new contracts, update myself. Or new licenses, I always update myself. So when the market goes through turbulence, I couldn't care less. But people who sometimes panic sell, they don't really understand what they're holding. If you grow your knowledge on the assets that you're holding, you wouldn't panic sell, because you would have the understanding of, well, this asset's actually going to achieve this and this and this based on this and this partnership, this and this license. So why would I care if it goes, essentially downwards? Because I know what the outcome is going to be, massively positive. Now, Coinbase is what we're going to talk about next. Coinbase employees are suddenly accused of accessing user data for phishing. So, not only the people, and Shelly just wrote, "You taught me to hold strong during turbulence, Miles. They will never shake me out of XOP." Let's go, Shelly, for listening. Absolutely amazing. In fact, I did tell a lot of people, essentially the same thing I told everyone right now. But good on Shelly for listening and holding on to her assets, and everybody else that listened to me as well. Good on you as well. No financial advice in any sort of way, but update yourself on the assets that you're holding. Now, Coinbase employees are accused of accessing user data for phishing. So not only are people afraid when it comes to in the crypto space, you've got to understand one thing: it's not rainbows and sunshines. Okay, so there's going to be so many situations that's going to be happening inside the crypto space that could push you off your game. It could be essentially turbulence, economic pressure, tariff situations, war situations. It could also be hacks. A long time ago, I said the bigger the crypto space grows, hacking is going to get more advanced. I said this a long time ago. I said the bigger the crypto space grows, hacking is going to get more advanced. And then, well, not only, sometimes you have to fear malware. For example, if you click on a random link, it could connect to some sort of malware and empty out your wallets or steal your passphrases on your browsers, on your smartphones, on your laptops, or so on. Now, there's also something else that's happening. Coinbase apparently found out that one employee, or more than one employee, was accessing people's data through their platform. So you also have hackers who are trying to find out what your username and password is and your details. But you also have sometimes maybe employees of that company looking into your data. So here it is. Coinbase recently sent out a warning after discovering that one of its employees may have accessed user data without permission, violating essentially internal company rules. And the warning was sent out through an email. Now, Mike, for example, who is the co-founder of Block, shared the email with the public, which led to more people learning about the potential breach. The email also essentially mentioned a growing platform of scammers impersonating Coinbase in order to steal user funds. It made it clear that Coinbase would never ask customers to move or manipulate their funds in the essentially mail. Coinbase said they found evidence suggesting that one of their employees had looked at a few customer accounts, including essentially Mike's own account, and the company said that the review was not in line with internal policies. And Mike shared the email to warn others, especially since scammers have been targeting Coinbase users lately. In fact, many inside the crypto community have been concerned about phishing scams becoming more common. Other crypto users suggested that this might be a part of the larger trend. He mentioned that Kraken, another crypto exchange, may have faced similar situations, maybe new schemes from attackers and so on. And Fisher also said, hinting at the possibilities of attackers gaining access through employees, that some hackers might just gain access to your information through employees, and that those hackers might send you an email knowing who you are because an employee of that exchange told that hacker who you are by selling your information, and that you might actually think you're speaking to Coinbase customer service, or you might think you're speaking to Kraken's customer service or any other exchange crypto customer service because they know your details, and you might think it's them. The reality of it is, it isn't. It's just maybe an employee of that company sold your information to a hacker, and the hackers pretended to be customer service, but they know everything about you except your username and password or where your assets are kept. But if they're not using it, essentially, if they know your full name, your house address, and so on, you might think to yourself, well, this might actually be an employee from that exchange. They know everything about me. But the reality of it is, it may be an employee of the exchange sold your information. So in response, Coinbase said they were investigating the claims made by essentially Zach XBT. The Coinbase spokesperson said, we are always of essentially Zach XBT's claims that are investigating, but did not provide further details at the time. At the moment, Coinbase has not provided more information on how many users were affected of the full details of breach. The company promised to investigate and keep publics informed. So, Coinbase is investigating essentially that employee or any other employees that have been selling people's information. This is not a great look in any sort of a way. But just once again, if you ever do receive an email from an exchange or a text message from an exchange or even a call from a crypto exchange, to double check always, just to double check, call, essentially end the call. Essentially, if an exchange, if a crypto exchange, and it has been, essentially so many scams. I get so many random scam calls daily, it's ridiculous. So if you ever do receive a phone call, for example, somebody pretending to be customer service from a crypto exchange, just end the call on them and then go to that essentially company, find their actual number and call them and say, did you essentially call me based on this and this reason? If you receive an email from a crypto exchange, go to that company's website, the actual company website, and email them back. Don't reply to that scam email. Email the crypto exchange back and say, did you send me an email? If you receive a text, do the exact same thing. Just go back to the company itself. Never respond to scams. Never click on random links. And malware can be very easily installed on your phones if you use an iPhone or an Android, both of them. Now, moving off Coinbase's situation to Russia. Russia has decided to come out with some interesting news. That they have decided to tokenize, to go towards tokenization, basically. And that they want to tokenize pretty much everything. Russia made the announcement today that tokenization is going to be big in their eyes. And they're going to start tokenizing pretty much everything they can in Russia. So here it is. Russia seeks to tokenize goods and property to boost investments in Russia. Financial authorities in Russia are drafting rules to govern the tokenization of various types of properties and goods. Officials in Moscow have admitted that they are acting in response to market demand and in the hope of attracting much-needed private investments. According to the Finance Ministry of Russia, the respective legal framework and infrastructure should be in place within a few months. So within a few months, Russia should have laws governing tokenization. The department believes that this will create new opportunities to put money in essentially commodities that are essentially not readily available to investors at the moment. The Ministry of Finance of Russia's Federation is developing rules for tokenizations of different goods and properties. The ultimate goal is to create digital financial assets based on them in order to expand the possibilities for investments. We are now working on a concept for tokenization of various things, including goods, the Deputy Finance Minister, Ivan, announced, speaking to reporters on the sidelines of the International Exchange Commodities Markets Forum. Quoted by the Russian business news agency Prime, he further explained that the process comes down to wrapping various types of property and goods into digital tokens, or the DFAs, as they are essentially categorized in the country's legislations. By doing that, Russia hopes to allow interested parties to invest in certain commodities that are essentially currently not available to investors. Perhaps in the future, tokenization will make it possible to do this, essentially, Ivan said. And the new instrument may become an element of financial transactions and offer new ways of trading investments, he added, according to a report published by the media Bits Media, a leading Russian outlet for crypto and blockchain-related news. That's why we are developing the tool of tokenization in Russia, so that there is also an opportunity to attract investments, including private investors, high-ranking, essentially, Muffin official emphasized, without specifying the assets he was referring to. Ivan also emphasized that this department is now looking into what needs to be done to finalize legal frameworks and implement the necessary infrastructures. We see demand from both banks and markets. I think we will essentially complete this in the next few months, he insisted. And Moscow has had essentially a complicated approach regarding digital assets, such as essentially cryptocurrencies and tokens. While the finance ministry has been pushing for a wider implementation, the Central Bank of Russia, CBR, has maintained essentially a much more conservative stance, Crypto mining was legalized in Russia, but later restricted in some regions of vast essentially countries, and placed under sanctions over its war in Ukraine, including financial restrictions. Russia has demonstrated interest in using cryptocurrencies for foreign trade, especially. An experimental legal regime for such transactions was established within a few essential laws signed by President Vladimir Putin. In March, Ivan revealed that Russia intends to employ its existing exchange infrastructures to test cryptocurrency tradings in Moscow. The MIFIN essentially views the Moscow exchange MOEX as a key player in the trials and considers adding more participants, he said. Earlier, essentially last month, Deputy Finance Minister Alexei announced essentially that Russia may launch organized trading of digital currencies within the experimental league regime. The CBR also essentially has since retreated its opposition, allowing it for free circulation and coins outside of the ELR. In the wake of Donald Trump's executive order to establish a strict Bitcoin reserve inside the United States, Russia essentially needs to consider using cryptocurrencies. And it urged the head of leading business lobby groups, Alexandra, president of Russia's Union of Industrials and Entrepreneurs, also voiced the support of the idea to conduct settlements with stablecoins backed by assets, including gold. So Russia is about to be going towards tokenization. And not only that, but they're going to be coming out with laws in a few months. So while countries sometimes take 6 months or a year to establish one rule for the cryptocurrency space, Russia is about to be introducing multiple regulations for tokenizations, and they're going to be working out what laws they are just in a few months and pass them. It does really show you the speed of other countries compared to other countries when it comes to cryptocurrency rules and regulations. While some countries take 6 months to a year to pass one legislations, Russia is going to be coming up with what rules they're going to govern in a few months and just pass them straight away. And Putin is just pretty much going to sign them in. Also, that again shows you what is happening behind the scenes, and that essentially Trump pushing for America to come to capital cryptocurrencies is what's pushing Russia to aim for tokenization governing now as well. Now, Kraken, which is a massive positive, by the way. Kraken CEO predicts on the subject of tokenization. Kraken's CEO predicts tokenized equities are going to surpass stablecoins. So, on Russia announcing tokenization is going to be big for them this year. Big, very big for Russia to be into tokenization. But also, Kraken, adding on top of that, has said that tokenization is actually going to surpass stablecoins in terms of usage. Kraken's CEO, co-CEO, recently stated that tokenized equities will soon outpace stablecoins in terms of market influence. This potential shift highlights a changing cryptocurrency landscape, signaling a major financial adoption and broader adoption of tokenized financial products. In a recent statement, Kraken's essentially CEO, co-CEO, projected that tokenized equities could outgrow the stablecoin market space. The implementation is a significant change of focus for cryptocurrency traders, and that's the CEOs emphasize that this evolution inside the market space could lead to a more investor concentrated on tokenized assets over traditional cryptocurrency investments, such as changes essentially in signals increased adoption. The projection could also lead to major companies reassessing their crypto portfolios, and market participants may also start prioritizing tokenized equities, resulting in potential reconstructing. Investors and companies may experience shifts in focus and strategies, and the financial world could see changes in the investment flows, likely increase essentially liquidity in tokenized markets. And historically, the rise of stablecoins reshaped digital currencies, much like the potential for tokenized equities to redefine markets. This shift recalls previous technological advancements based on essentially current data that's coming out and expert opinions. A transition to essentially tokenized equities could drive further innovation in terms of market expansion for the crypto market space and the traditional market space connecting together. And historical essentially trends suggest accelerating adoption and diversification, and the perspective that's coming out from the co-CEO of Kraken. And he also said, to end with, the future of finance is tokenization. While stablecoins have paved the way, tokenized equities represent a much more larger market opportunity that will revolutionize how we think about asset ownership and trading. So, interesting perspectives that came out from the essentially co-CEO of Kraken. Perfect timing with the Russian announcement, but the perspective that the tokenization market space will become a humongous market space compared to stablecoins is very, very true. It definitely is. Because if we're going to tokenize everything when it comes to property, so that means the real estate market space of the world will become tokenized, the automotive industry will become tokenized, jewelry will become tokenized, art will become tokenized, bond will become tokenized, your house keys will become tokenized, everything around you will become tokenized and digitized, then yes, without a doubt, the tokenization market space will be a much more bigger space than stablecoins can ever dream of becoming, which is a great thing that essentially particular crypto assets are very big into tokenizations, one of them being the XRP ledger. Now, Japan is what we're going to talk about next. But before we talk about Japan, and the second largest bank in Japan is the announcement that's coming from, let's go start the comment section first. As I said previously, this is live, which means if you do have any questions, put it outside the comment section. More than happy to answer the questions you may have. So let's go start the comment section first, and then we go straight into news afterwards regarding Japan, the second largest bank, and what they're planning on doing for the blockchain space. So let's see where we're at. We were at here. Orphan says, when the market was up, I did do anything. Now is down, and I'm doing exactly the same thing. Nothing I'm here for long term. Let's go, Orphan. Facts. Christopher says, I have a small amount of crypto on Coinbase. I can't tell you how many times I've gotten a notification saying someone tried to get into my account with a link and a phone number. I called one time, and they said someone tried to get my ETH. Lol, I don't hold ETH. Hi, Miles and family. Alex, good to see you. How you doing? How you been? Mo, thoughts on Loaded Lions crypto coin? It's pumping. Loaded Lions. Yes, a scam. Mo is a scam. Mo, Loaded Lions is a scam. If a crypto project is called Loaded Lions, it's a scam. It's a pump and dump. Shelly says, what antivirus software do you suggest for iPhone and Apple devices? Great question, because a lot of people assume just because they have an iPhone that they can never become compromised. Sure, Android is a lot more open source, which means the risk of compromisation is quite high, actually. But just because somebody has an iPhone, it doesn't mean you can't get compromised. And great question from Shelly regarding antiviruses. What I would suggest is you can download, for example, AVG. It's free as an antivirus for an iPhone if you want to do that. There are just multiple essentially antiviruses that you can download for iPhones, and some of them are free, some of them are premium, essentially paid and so on. But there are free ones out there, and if I'm not mistaken, AVG does offer a free one that everybody you can go and check out essentially to protect yourself on your iPhone regarding malware situations. And also, if you have an Android, same scenario. You can download Avast, for example. That's free. You can download AVG. That's free as well. A few other ones. But good question, Shelly, regarding iPhones. Because a lot of people really do assume because they have an iPhone that they can't get compromised in any sort of way because Apple's very encrypted. But even Apple's essentially devices can become compromised. Just depends on the hacker. Now, Japan is what we're talking about next. Japan's second largest bank, SMBC, plans to launch a stablecoin on AVAX. The second largest bank, essentially in Japan, decides to launch a stablecoin on AVAX with Fireblocks. So SMFG, the holding company of Japan's second largest bank, SMBC, is set to introduce its stablecoin. As per the reports, the efforts essentially includes partnerships with Ava Labs, the creator of Avalanche blockchain, and Fireblocks, a platform for digital asset custody and transfers. The initiative essentially hopes to enable immediate 24/7 cross-border payments that could cause dependencies on essentially legacy infrastructures such as SWIFT, whose operations could be delayed by the differences in banking hours and intermediaries. SMBC plans to collaborate with Japanese IT company TIS to perform pilot testing of its stablecoin project in the fourth quarter of 2025 or early 2026. If the trials are successful, live issuance should essentially follow later in the year. The step is essentially a part of a broader scheme by SMBC to enhance cross-border payment systems through blockchain technology. In 2024, SMBC, Mitsubishi UFG Financial Group, and essentially Mizu Financial Group participated in a project called Project PAX. SMBC participation with blockchain technology began back in February 2019 when its IT team completed a blockchain proof of concepts for payment in promises on the essentially Marco Polo trade finance platform developed by R3. which is essentially XDC. SMBC was a part of the group that included Commerzbank, BNP Paribas, Angola Gulf, Trade Bank, Standard Chartered Bank, Dennis Bank. A lot of banks were involved in that Project PAX. In July 2020, SMBC collaborated with Singapore essentially based Counter to digitize its trade finances offerings using blockchain technology. The bank's shift towards stablecoins is a part of a wider trend in the financial industry, with big banks like JP Morgan and Citi exploring similar blockchain solutions for better and faster payment systems. So, technically, it's the company behind the second largest bank in Japan that's decided to launch a stablecoin on AVAX with the help of Fireblocks, which is incredible news still. Now, for AVAX especially. Now, US government is what we'll talk about next. So, as you all know, the US government a while ago introduced the idea of a Bitcoin essentially reserve and a digital stockpile. And the digital stockpile included XRP, Solana, and Cardano. Now, also there were a set of rules, and the rules were that tax-paying money could not be used for purchasing crypto assets, and there had to be an alternative way for the US to raise money to buy crypto assets for its essential portfolio. Now, we're about to be getting an update from the US very soon, and by very soon I mean essentially this month, in a few days. In a few days, we're going to get an update from the US of what their next plan is. So here it is. The US government's crypto reserve has been talked about for more than ever, especially since there is, essentially the uncertainty of where's the money going to be coming from to essentially for cryptocurrencies such as XRP, Solana, and Cardano that are included in that digital stockpile. And President Trump had also previously signed, executive order to create a Bitcoin reserve, but the inclusion of these altcoins is essentially at their digital stockpile. The biggest question remaining of where's the money going to come from? The Treasury and other government agencies are meeting this week to disclose their reserves of Bitcoin and cryptocurrencies, bringing more clarity to this question as well. According to a recent post by Bitcoin Magazine CEO David Bailey, this crucial audit will be completed by April 5th, 2025. Bailey's post teased that the audit would offer significant details about the government's Bitcoin holdings, which are spread across various federal agencies. He said, depending on what we learn, might answer many of the open questions about the recent price action. The audit will not only cover Bitcoin, but could also offer a look at other cryptocurrencies, including XRP, Solana, and Cardano. So around April 5th, we should have an idea. On April 5th, or a few days past April 5th, we should have an idea of what America's next steps are going to be in that crypto portfolio they've created for themselves. And meanwhile, Bitcoin enthusiasts have criticized the idea of including other cryptocurrencies, but the audit could clear things up and show essentially XRP, Solana, ADA that are going to be a part of the government portfolio. The US government currently holds 198,012 Bitcoins worth around $16 billion, according to Arkham Intelligence. Over the last decade, the government has seized over 400,000 Bitcoins through criminal and civil essentially fortifies. And while these Bitcoin holdings are well known, the government's altcoins assets are also still unclear. The upcoming audit is expected essentially to provide a clarity on this front and may also give more details about the government's plans for altcoins. So, April 5th onwards, we should have a better idea of how much essentially in terms of crypto assets does America hold and what's their next footsteps regarding their crypto stockpile. Now, the US, in terms of just keeping on the topic of essentially where the money is going to come from to raise money to buy more Bitcoin or other crypto assets, one idea has came about from the US because they can't use tax-paying money. So they have to come up with alternative ideas. Now, this is one idea that they've come up with. The US proposes Bitcoin bonds for strict reserve expansions. President Trump's administration has proposed a new Bitcoin-backed bond, and they're calling it BitBonds. Aiming to integrate Bitcoin into a national reserve strategy, this initiative is seen as a move to align with digital asset integrations into national finance, potentially redefining US debt management. The Bitcoin Policy Institute, led by Andrew Holmes and Matthew Pines, proposed Bitbonds to implement President Trump's strict Bitcoin plan. Bitbonds would finance part of the federal debt while increasing Bitcoin reserves. Trump's essential designation of Bitcoin as digital gold supports this policy. Interest savings and potential appreciation are key highlights of Bitbonds, offering an annual interest rate of 1%, a dramatic reduction from the 4.5% standard US debt refinancing using Bitcoin, presents a novel pathway to reduce expenses. The introduction of Bitcoins represents a revolutionary US essentially step for financial policies, allowing for unprecedented innovations in how we manage federal debt. Andrew Holmes, the founder and CEO of New Market Capital and Battery Finance. The reaction to this proposal sees considerable interest from financial markets and experts, through essentially some cautions against potential volatility. Key figure endorsements emphasize the innovation through essentially implementation challenges remain to be resolved, and analysts foresee innovative financial avenues emerging as Bitcoin integrates into sovereign finances. Regulatory frameworks will require careful adoption to stabilize the interactions of digital assets and traditional finance strategies. Technological advances and policy updates remain crucial for essentially sustaining momentum in this sector. So, the first idea they've came out with that could, sounds better than the previous ideas. The previous idea was to sell the food supply of the US to buy Bitcoin, which is the dumbest suggestion ever made to date. The newest idea is Bitbonds. That makes more sense if they want to do that. It's an interesting play. Now, more essentially news on what's happening behind the scenes. As I've been saying, well, everybody's very focused on what's happening on the scenes, which is essentially the war scenarios and the tariff situations, which are all going to be happening no matter what. I mean, tariffs are going to be happening, and the war situations, some are really brewing up. But what's happening behind the scenes for the crypto space is the interesting factor. And that's why essentially, if you're inside the crypto space, if you're inside the market space, that's where your focus should be on also. What's happening behind the scenes, rather than just what's happening on the surface. Again, of what I mean by that, a new report from a crypto asset manager, CoinShare, indicates that a significant upswing in institutional investments in digital assets. With institutional investments in digital assets, with an impressive influx of approximately $226 million over the past week. Over this past week, $226 million have entered the market space towards crypto assets from institutions. Now, you wonder yourself, is probably ETFs again? Not really. So, this surge follows a period marked by substantial outflows that were hitting such a potential recovery in the market that's happening now. The data reveals that Bitcoin products were particularly appealing, attracting $195 million, with also $33 million entering the markets after several weeks of losses to well-known assets such as Ethereum, Solana, XRP, and SUI. In terms of regional trends, the United States dominated with an impressive inflow of $204 million. So while, again, such this panic situation was happening inside the market space this past week with the turbulence of the war scenarios and the tariff situations, tremendous amount of money is entering the market space, and it's going towards Bitcoin, Ethereum, XRP, Solana, and SUI, and the money's coming from institutions. So while retail section, some people inside the retail section might be panic selling, institutions are buying during this war scenario tariff situation. And even though some people assume it's going to be a bad market space, why are the institutions buying? In terms of regional trends, the United States dominated with an impressive inflow of $204 million. Switzerland and Germany also contributed with inflows of $14.7 million and $9.2 million. Showcasing diverse investment patterns across various territories, recent market data also included, Recent market data also indicated a modest outflow of $74 million last Friday, considering with the economic indicators in the US that surpassed expectations, leading to a more cautious stance from policymakers. And CoinShare also reported a $226 million of inflows into digital asset investment products, marking 9 consecutive days of growth following the previous essentially outflows we had. After 4 weeks of losses totaling $1.7 billion, altcoins began their recovery with a $33 million influx, driven mainly by essentially towards Ethereum, Solana, XRP, and SUI. Those are the tokens that our institutions are going towards right now. Ethereum, XRP, Solana, and SUI are where institutions are going towards. The findings essentially underline the necessities for investors to adapt a careful strategies essentially when navigating the fluctuating landscapes of digital asset market spaces. Balancing essentially short-term volatility with long-term goals remains crucial for success. So while everybody might be focused on tariffs and essentially war scenarios, which is on the surface, behind the scenes, institutions are entering the market space and they're going for particular crypto assets. And one of them being XRP, the other one is actually being Ethereum and Solana and SUI. Now, on the topic of XRP versus Ethereum. The cross-chain bridge that's turning XRP into a DeFi game changer. One company decided to essentially create a much more bigger competition between Ethereum's chain and the XRP ledger. So here it is. Blockchain infrastructure firm Percent Technology has launched a public testnet of its new Ethereum compatible sidechain tailored especially for the XRP ledger. And the sidechain's testnet deployment essentially signifies a concrete progress towards enabling essentially Ethereum-based smart contracts within XRP's native blockchain environment. Smart contracts coming from Ethereum to XRP ledger. Percent essentially designed this especially for the XRP ledger to take competition away from Ethereum's chain and bring it to the XRP ledger. Percent partnered closely also with Ripple's development division, RippleX, alongside interoperability platform Alexa Network and blockchain technology firm Common Prix, two essentially joint initiatives targets enhanced functionalities for XRP ledger, and particularly in decentralized finance applications through a full Ethereum virtual machine, which is EVM. Initially previewed essentially as a developer environment in late 2022, this latest testnet introduces an expanded capabilities. Key features include seamless integration with standard Ethereum wallets, such as MetaMask, and efficient cross-chain bridging facilities by essentially Squid Root technology. This setup simplifies the exchange of assets between XRP ledger and Ethereum-based protocols, so it connects essentially XRP ledger to Ethereum network much more smooth path, essentially bringing smart contracts from Ethereum to the XRP ledger, bringing essentially liquidity from Ethereum's chain to the XRP ledger. To support adoption, Percent launched resources including comprehensive technological documentations and 2 dedicated facets providing XRP tokens for testing purposes. The first facet is hosted directly by Percent, while a community managed facet operates via Discord through essentially their validators. These tools are aimed at developers to test and build new decentralized applications leveraging XRP ledger's fast transaction and low-cost environments. Ripple's CTO David Schwartz previously expressed a clear support for the project, underscoring its strict values and diversifying XRP ledger's utility as a smart contract hub. He noted that XRP ledger's expansion into Ethereum's territory could foster a wider adoption among developers familiar with Ethereum tools. Percent is also planning to gradually introduce additional ecosystem participants, including new validators and stake partners, over the coming weeks. These steps illustrate careful and deliberate growth designed to strengthen the XRP ledger's ecosystem infrastructure before transitioning to the mainnet deployments. The testnet represents XRP ledger's deliberate push into Ethereum's domain, potentially increasing XRP's market relevance by drawing developers and capital typically reserved for Ethereum towards the XRP ledger. So what Percent has just done with their testnet, which is going to become their mainnet, is try to essentially successfully get liquidity across from Ethereum to the XRP ledger, because the capabilities that Ethereum has is quite vast in terms of scalability when it comes to smart contracts and so on. Now, people who are very familiar with essentially developing on Ethereum's chain when it comes to smart contracts can use that same familiarity that they have with Ethereum's chain when it comes to building those smart contracts. They can do the exact same movements on the XRP ledger, which makes developers' lives 10 times easier. Because if they know how to develop on Ethereum's chain when it comes to smart contracts, they can do the exact same thing on XRP ledger's chain. Minor differences, not major differences as they were in the past. But also, Pearson, by doing this, they've just opened the floodgates of liquidity being emptied out of Ethereum's domain, which is their smart contract territory and so on, into XRP ledgers, which is incredible. And on that note, we have come to the endings of tonight's live. Obviously, before we do go, I will be going to the comment section, but before we do, if you're watching this for the first time ever, and you're wondering what is this is called the CMF Live. And the CMF stands for Crypto Miles Family. My name is Miles. And this is episode 290 of the CMF Live. And you can tune into this live on Monday to Friday, 11:25 p.m. UK time onwards, where I talk about the most recent news that's happening around the world in terms of cryptocurrencies, CBDCs, AI, politics, and regulations. Vital information for you to know about regarding the world completely transforming into a digital space. And we also do Q&As on this live as well. And we also, essentially, regarding the disclaimer of this live, as always, is not financial advice, no political advice, and what I say is only for entertainment purposes. And today we had some amazing news regarding the crypto space, regarding essentially South Korea in terms of 3,500 institutions are going to be, opening their doors to cryptocurrencies from South Korea's market space in terms of institutions, or Russia going to tokenization, or essentially the perspectives that came out from Europe regarding Trump is essentially forcing businesses in the retail section to go towards cryptocurrencies, the perspective coming from European regulators. That's an amazing news. It does show you that Trump is really trying to, help the crypto space more than what anybody believes. And he is trying to build that foundation for the crypto space. Now, before we do go, let's go to the comment section first. Are you seeing a buying opportunity depending on what is decided on April 5th? Yeah, I would say, definitely. Happy Pisces, good to see you. How you doing? How you been? Susie, yeah, I would say, in market spaces like this is definitely a buying opportunity. All with the institutions is actually buying a tremendous amount of assets. Hello again, everyone. Good to see you, Thompson. How you doing? Now I have a very strong to believe that there is no parabolic bull run because of the regulations that are setting up legal precedents for the future. This is definitely going to take some time to fully develop on the global scale. Therefore, there's definitely another grace period to accumulate more cryptos from this point going forward, 2026, 2030, when you least expect it. Let's get Thompson. Thompson, I think when you least expect it is true, but also it's going to be sooner than that, way sooner than that. Good night, Miles, and on CMF, you've got to also factor in the fact that banks and institutions need liquidity. And if they wait till 2030, they have a high chance of going bankrupt, or Chapter 11 or Chapter 15. So they need that liquidity now. They don't need that liquidity in 2030. Good night, Miles, and all CMF. Thank you for a great live. JP, let's go. See you tomorrow, but same time as usual. Thompson, see you tomorrow, same time as usual as well. Night, Miles, and CMF. Pablo, good to see you tomorrow, same time as usual as well. Thanks, Miles. Have a great night. Mickey, see you tomorrow, but same time as usual. Night, Miles, and CMF. Peg, see you tomorrow, same time as usual as well. Great content, as always, Miles. Let's go, Mac. Mac, see you tomorrow, but same time as usual. Good night, Miles and CMF. Thank you. See you tomorrow. Mike, see you tomorrow, same time as usual. You're the best, Miles. Good night, CMF. Christopher, see you tomorrow, but at the same time as usual. Thank you, Miles. Pierce, see you tomorrow, same time as usual. Mike, see you tomorrow, same time as usual. Stormy, thanks, Miles. Good night. See you tomorrow, same time as usual as well. Great live, as always. Take care, all Miles and CMF. See you tomorrow, same time as usual. Ray, night, Miles and CMF. Brilliant live, as always. CMF, thank you for your valuable time you share with us. Let's go, Joe. See you tomorrow, same time as usual. Thank you, Miles. Let's go, Susie. See you tomorrow, same time as usual as well. Most importantly, do not sell any of your cryptos. Let's go, Thompson. Thanks, Miles. Great live. See you tomorrow. Have a great night and day, Miles and CMF. Let's go for forever. See you tomorrow, same time as usual. I will be seeing everybody tomorrow, same timing as usual, 11:25 p.m. UK time onwards for episode 291 of the CMF Live. Thanks, Legend. Night and day, CMF. Let's go, Shelly. See you tomorrow, same time as usual as well. Thanks, Miles. Great live. See you tomorrow. Have a great day. Let's go for forever. I'll be seeing everybody tomorrow, same time as usual. Everybody have a great day or a good night, depending on where you're around the world. And thank you so much to everybody from the CMF who is watching us on X, for example. If you watch us on X, thank you so much to everybody from the CMF who liked this live on X, who retweeted this live on X, who liked each other's comments and put a comment outside the live on X. And if you watch us on YouTube, thank you so much, CMF members, for also liking the live as well and putting a comment outside the live. It genuinely helps to grow this essentially family in the crypto space, and we can help a lot more people. So thanks so much to everybody who liked and retweeted and essentially commented on this live outside the live and liked each other's comments. And by the way, thank you so much to everybody who followed me during this live as well. See everybody tomorrow, same time as usual. Everybody have a great day or a good night, depending on where you're around the world. See everybody tomorrow, same time as usual.